I really take the approach to underpromise and overdeliver. The tendency to attract an investor is to show the most rosiest picture possible. The problem with that is twofold. Number one, they may expect those results, and if you really assess the assumptions and the critical points that were necessary to achieve those results, you realize that the reality is it's a low probability we're going to achieve them. Secondly, for the most part, they're likely to discount those results. They're likely to say you can't achieve them, and they're going to start to wonder about management credibility. So, my approach in terms of investors is do the best job you can to forecast what you think is achievable. And for the most part, my bias is always to turn those back a little bit so that you actually can over-deliver on the results, which gives the investor a lot more comfort. I would much rather have an investor who looks at my numbers and says, those are achievable, than to say, I don't believe you, let's go back to the drawing board and come up with a forecast that is 50% of what you've suggested. You always want to outperform the expectations that you set for your partners. That is a key thing that you want to try to do. The tendency is to overstate the expectations so that you can drive a higher valuation for your company. Almost 9 times out of 10 that backfires. Unless you have the experience and the track record that can justify why you can achieve those numbers, your credibility is called into question when somebody looks at the underlying assumptions and says, those are the most optimistic set of projections that you could do. Let's look at something that's more reasonable and achievable and base the valuation on those things.